Hi guys, it's Henry from Investment for Expats. If you haven't come across us before, we specialise in cross-border wealth management for expats. I'm going to go over some of the options you have in terms of your investments if you leave the UK, and just go over some of the common traits, what most people do, or what you may want to look at doing. Now, I'm firstly going to start off with ISAs. A lot of people in the UK may have contributed to an ISAs in the UK. And you may be thinking, if I move abroad, what are my options for the ISA? Can I move it abroad? Can I keep it where it is? Can I take it out of the ISA and then put it back? Generally, the rule is if you're not living in the UK or you're not a UK resident, you can't contribute to an ISA. It's quite simple in terms of that. Now, the caveat comes is that you can keep, for most cases, the ISA. It does depend on the individual platform if they'll let you keep the platform open. Some say you need to close it. They're getting more lenient these days in letting you keeping it open. Some may even put trading restrictions on it, so you may want to look at options in terms of that. But say if you can keep it open, it can be worth keeping the ISA, particularly if you're looking to move back and then you can contribute when you're back in the UK. The UK platforms are normally cheaper. You do have expat platforms that you can use, such as Novia Global is the only one that I know of that opens for expat ISAs, but in all honesty, the cheaper platforms like Interactive Investor, AJ Bell, in the UK. So particularly if you're looking to move back or to go back to the UK in a few years' time, it'd be normally recommended that you keep the ISA there and just let it grow in terms of that, and then when you go back you can top it up. It works out more cost effective for a lot of people. Again, this is not specific advice, and I would seek to take financial advice if you are looking at that, but in most cases it's better to leave it there. If you're looking to leave the UK long term and you're in a place such as Dubai, or particularly where I am in Thailand or Malaysia, where they don't have tax on foreign income, you can open up an international account. You can let it grow tax-free, and we'll go into that in a bit, into some of the international accounts that you can open, where if you're living in a tax-free country or a country that doesn't tax on a territorial or remittance basis, that it can grow tax-free. So it works very much like an ISA in that respect. In terms of the SIPs, now SIPs is a bit more difficult because it depends very much on your personal situation if it's worth transferring out. I can give you some general information in terms of the cost of international platforms versus the UK, but I'd always seek to get qualified financial advice if you are looking to transfer a pension, particularly if it's a DB scheme, but it can go over some of the costs. Now, in terms of platforms for international SIPs, some of the main ones you've got a Morningstar and Novia. The cost for them at the base cost is around 0.35%. It does go down if you've got over 500,000, and it keeps going down on a kind of tier-based system on that. And the trust costs are normally around £180. On top of that, you have the fund costs. Now these can cost whatever, but normally you'd be looking at 0.1, 0.2% for ETFs, and you have an IFA cost as well. Because normally if you're transferring into an international SIPs, you will need an IFA. So as you can see, in terms of how it kind of relates to costs in the UK, it is a bit more expensive because you're adding the trust costs. Some of the platforms are a bit more expensive, although I think they're pretty competitive these days in terms of pricing at 0.35%, but it does normally cost more than if you were to have a SIPs with, say, AJ Bell, and you're paying kind of 0.25% without the trust costs, etc., and you've got the same fund. So again, depending on your situation, it can be worth to leave it in the UK, particularly if you're looking to go back there. There can be differences. Some advantages that you do have in international SIPs is the currency options. You do have more currency in fund option, but I don't think that's necessarily a big option for most people, unless you're kind of living in an area and you want it all to be domiciled, for example, in euros. That we've had certain clients wanted everything in euros and nothing in GBP, but for a lot of people it's not really a big advantage. And we'd say seek financial advice. If you are looking to go offshore, it does normally cost a bit more, but those costs aren't necessarily too different to what you'd pay in the UK. In terms of investment accounts, now again, this is where it's a bit more specific on where you're living and what your options are. Normally, if you've got investments in the UK, they can be subject to tax. So you're saying if you're living in a place like the Middle East, for example, or again, we go back to those areas in Southeast Asia, Thailand, Malaysia, Singapore, where they have a kind of territorial or remittance-based tax system, you can open up accounts in an offshore location. I'll give you some accounts that you can do on your own, DIY investing, Swiss Quotes, Saxo Bank. These are kind of low fees. Saxo Banks has a 0.12% fee, going down to 0.06 if you're a member of the bank. Swiss Quotes is something similar as well. If you're looking for kind of IFA-based platforms, these are more for estate planning. You've got the likes of Arden at 0.35% to 0.4% base costs, and the Novia and Morningstar as well are some of the top platforms that you may want to use in there that cost around 0.35%. You're paying the higher fees for obviously the location, and normally the platforms have protection from a larger custodian bank, which you're paying the custody fees of normally around 0.2% for the custody fees plus the extra platform fee as well. So it is a bit more expensive, but again, if you're living, say, in the Middle East, for example, these can work very much tax efficient for you, and it's not too much different to what some of the investment accounts you'd pay in the UK. If you take, for example, Hargreaves Lansdown, one of the biggest UK investment platforms, around 0.45%, they're cheaper than that, and also they have a tier-based system. So if you work it well and you've got particularly large amounts, it can work out tax efficient for you, and not too much more than what you would pay in the UK for those investments accounts. But again, for an individual basis, seek financial advice, speak to a qualified advisor on what are some of the options for you. And then finally, going to touch on the state pension. So you can make voluntary contributions to your state pension. You've got two options for most people, class 2 and 3. If you can, it would make more sense to go for class 2 because it's the cheaper option than class 3. If HMRC do try and push you into class 3, but you are eligible for class 2, you can contest it. There's a high success rate if you do contest it and you are eligible to go for class 2, to make those voluntary contributions to make sure you get the full amount or a higher amount of your state pension. So they're just some of the things that you can do in terms of the platforms, your UK assets that you've got. We've got a lot more information on the website at investmentforexpats.com. We've got over 500 blogs, and a lot of them do content on kind of cross-border UK if you're looking to leave the UK, and some of the options you have in regards to that.